So the agenda is to tell you quickly about us, but the focus of the webinar is what is Ichimoku-renko Hyo, which is a pretty engineered, highly engineered Japanese indicator, relatively popular as well. We will answer the question, does it actually work? Which is very important. And if it works, how you use it and how you manage risk when you're using it. And then we'll end the webinar on discussing some dangers and effects. And then also we'll have a Q&A at the end. Before we proceed, I am required legally to ask you to read this disclaimer and also the risk warning, so please do that, and then we'll proceed after that. All right. So we are Blue Sky Forex. We're part of Blue Sky Binary, an education, research, and trading group that teaches a range of binary option and foreign exchange strategies. And we also provide 24-hour trade support and analysis to allow both binary option and FX traders to trade safer. Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you to help you become highly profitable currency traders. Now, there are two types of currency trading, trend trading and mean reversion trading. Okay, trending is where you're actually trading the direction of the market, where the liquidity is, and mean reversion is where you're trading against the market or where you expect there's going to be a small bounce or what is known as a retracement. The Ichimoku indicator is actually a composite indicator. Okay, it is created to determine firstly the trend, so it also shows you in which direction the overall trend is, and then also key support and resistance levels in that trend, which when the price hits are considered signals. It was developed by Goichi Hosada, a Japanese journalist in 1969, and Ichimoku-renko Hyo stands for equilibrium at a glance, because it gives you the equilibrium. Where is the market headed and where are the key turning points and support resistance points? At its very simplest, it's a concoction of moving averages, different moving averages, that includes an inbuilt trend indication and signals mechanism, like I mentioned earlier. It is a bit more advanced than the moving average crossover divergence indicator, which is MACD. It looks a bit confusing, it looks visually daunting, but after some practice, you know exactly what to look for. Okay, it's made up of, I would say, 4 key things. Okay, 4 key parameters. You may want to consider the 5th one as well, but it's not that important. Firstly, normally the indicator comes in these colors. You have a blue line, a red line, and a green line. The blue line is normally the Tenkan Sen. It is known as the conversion line. And it's the 9-day moving average, basically. Now, I've used days, but of course, you're going to be using hourly charts or 4-hourly charts. So in this instance, you are basically looking at a very quickly moving average, so to put it. And then you have a slower period moving average. This is known as the Kijun Sen, the baseline. And this is a 26 period moving average. Okay, so you have the Tenkan Sen, which is 9 periods, and then 26. Right? And remember, those 2 numbers are very important, 9 and 26. They're also the moving average periods in a MACD, for those of you that trade MACD. Then you have the lagging span, which is looking at the close price for the the current day minus 26 days before. And then you have the leading span, which is literally the blue line and the red line, the Kijun and the Tenkan, divided by 2 plus 26 days forward. It's actually a forward-looking forecast of where the price is headed. Now, that's not always right, and you don't get excited and you trade that, but it's just important that there's a forward-looking element in this indicator as well. Okay, I'll get to those lines in a bit again, but for those of you that kind of understand the indicator and are just here on this webinar to get in a nutshell, look, does it work? Yes, it actually works well. Momentum and bullish signals, bearish and bullish signals inside the Ichimoku work in trending markets, and often can help to indicate reversals in a market as well when there's a flip. This is known as a cloud flip or a Komu flip. One thing I didn't mention is that you have these very obvious red shaded areas and green shaded areas. It's simply the difference between the red and green lines, which I highlighted earlier. And these are known as clouds. And how the price is situated relative to these clouds can dictate what's going to happen to price in the future, possibly. It's not a 100% guarantee, but it's just worth noting that that's how these clouds work. So overall, we would rate it pretty highly. You know, we teach all the indicators here on these webinars. This is one of the better ones. It does work in those conditions, but no, it also doesn't work for a few reasons. What I mean by no, it also doesn't work, what I mean is it doesn't always work. Okay, so it's not a 100% strategy. It's based on lagging data. It's not necessarily repainting, but it is lagging data, so it needs to be used carefully. It can be visually very distracting. If you are plotting all the 5 lines, the so-called sens, and the 2 types of komus, both the green and the red, then you're looking at a very dense indicator. There are also 4 types of signals. We're going to focus only on the main types, but there are also 4 types of signals generated inside the Ichimoku. So, how do you calculate Ichimoku? I briefly mentioned earlier. You have the blue line, remember the quick line, the moving average, and the red line, which is a slower line. These are known as the Tenkan and the Kijun Sen respectively. Okay, and it's literally just moving averages over the past 9 periods. In this example, we're using days, but in your trading case, unless you're a duration trader, which you're probably not, you're probably a scalper, or you're probably a day trader, you're going to be using hourly charts. So 9 hours previous, 26 hours previous, look back for the Tenjan and the Kijun. The Senku span is the average of these 2 lines, the Tenkan and the Kijun Sen, plotted 26 days ahead. Just to reiterate, it's that green line into the future. And then you have the Chiku span, which is the closing price plotted 26 days behind, okay, which is the green one. Now, how exactly do you use it? The blue line is the fastest and most sensitive line, right? Because it has the shortest look-back period, calculation period. And this line is following the price action or the current price, the spot price, the closest. The red line trails the faster blue line. It's slower, but it also tends to track price. Okay? The cloud, the Kumo, these are known, this green one here or the red one. This is the shaded region between these 2 lines. Now, here's the way you would use the Ichimoku to find out in what type of a market you are in terms of direction. So, okay, so this is a directionality indicator. It's either upward trending or downward trending, or it's mean reverting. If the price, okay, look at this black line here, okay, this black step chart here. If this is above the green cloud, okay, and in this case it is, here you can see it, it's clearly above the green cloud, it's a bullish trend. If there's some cloud cover over the price, so if you have this red cloud, this Kumo above the price, right, like you see here, it's a bearish trend. And notice how the price continued to drop. Okay, so that gives you a directional indication. Now, let's talk about signals. If this blue line crosses the red line from below, like you see here, you see this very, very clearly here around March, April, mid-March, this is a bullish signal. If the price is also above the green cloud and you get this crossover, that's an even stronger signal. Now, in this case, that's not happening. Mind you, here the blue line has crossed the red line. The Tenkan Sen has crossed the Kijun Sen from below. But the price is below a red cloud, right? But what you have seen is that somewhere here, you already had the flip, right? You had a bit of red going to a green cloud, then a bit of red as the price hit a lower low. But then you have a Kumo flip, which occurs somewhere here where the red cloud becomes green distinctly, right? And this is a bullish indication, right? So previously, a month earlier, and mind you, when you were using this, you'll be using this on hourly chart. So everything I'm saying on a month basis, you can apply to hourly basis. Just a few hours earlier, you noticed that you had this crossover, which was bullish, and then you had the confirmation that the red cloud turned green, and voila, you had a pretty strong trend up. Okay. And everything I've said can be reversed for bearish signals as well. So if the blue line crosses the red line from below, it's bullish. If the blue line crosses the red line from above, it's bearish. As simple as that. Okay. Now, here's something interesting. You can actually use the price relationship with the cloud, okay, as a better entry point by waiting for a corrective wave in an uptrend to touch the green Kumo and correlate this with a crossover for a long entry. Okay, so what I mean by that is, please just look at the price here, which is the black lines. Okay, don't focus on anything else. And notice how it's headed up. Obviously, it's headed up, long-term upward trend. But the question for you as a trader is, where do you get in? Do you get in at the top? Do you wait for a higher low, right, which is better, a mini retracement? And the Kumo, this is the green Kumo, right? Remember, as long as price is above the green cloud, this is bullish. So it's a very great example of how it's continued to keep the price up. But the best entry point is actually at these pink marks, these purple, magenta, or pink marks, whatever color you see there. The black price has actually come down and it's bounced off these Kumos. This retracement to the Kumo edge, remember this green line at the top of the Kumo is known as the Senku span, right? The forward-looking line. And this is a great indicator for a bounce. Normally the price will bounce off these lines, right? It'll actually bounce off these clouds. So when the price is touching the cloud border and you get this crossover, which I mentioned to you earlier, where the conversion line crosses the baseline from below. Again, just to remind you, conversion line is simply the Tenkan Sen, and the baseline is simply the Kijun Sen, the two moving averages. If you get that moving average crossover correlated with a bounce on the cloud, it's a pretty strong signal. It's a stop and continuation pattern, basically. Okay? So, that's how you would use it for a bullish, okay? And everything I said about that you can reverse. So if the red line crosses the blue line from above, it's a bearish indication, all right? And in this case, again, with the Kumo bounce that you used here, right? You use the price bouncing off the Kumo as an entry, you can use that here as well. So if it's in a bear trend and you see the price going up to challenge the border of the lower Kumo, you can actually enter a short. You can actually place a pending order at the lower periphery of the cloud and take a short here. Okay? One thing to note is that when a green cloud becomes red, that's known as a Kumo flip, and that means that there is a possible change in direction. Okay? So that's it. That's how you would use and interpret the Ichimoku cloud. Now, of course, there is more Ichimoku theory. You can go deeper into it and look at the other two ways on how to take signals, but we have gone through the most popular manifestation or adaptation of the signal. Okay, so that's how you would use it. Now I see a lot of questions already pouring in. Don't worry, I'll answer those towards the end. Let's talk about risk when using the Ichimoku. So in terms of setting up your risk reward, set your risk levels accordingly. Okay, so if you're scalping, the risk reward is typically you're going to try and go for 2 to 1, but it's very tough to get 2 to 1, right? Scalpers normally are at 1 to 1. They're kind of stuck there. It's kind of lower quality trading slightly, not necessarily, but slightly. Whereas if you're day trading, you're going in for a better risk reward. Ichimokus are good for day trading for multi-hour positions. If you're trading larger time frames, even for position trading, and I mean weeks and months, right? But generally speaking, you want to be going for a higher risk reward ratio than 1 when you're trading the Ichimoku. The second thing is dollar cost averaging. Take a look at this. This is basically as you average into a position. Good experienced traders use this. Instead of waiting for an ideal position entry point where the price may not reach and your pending order just expires or extinguishes, you can start to build a position a bit earlier with lower lot sizes like like nano lots, right? And ultimately, you're committing the same amount of lots or capital to that sequence, but you're just getting a better price as the price averages into your multiple positions. So that's it's a small advantage you can get using that, but in this market, you can use every advantage you need, so that's good. And you can certainly de-risk your trades using trailing stops. Okay. So we're at the end, but I'd like to advise you that there are quite a few EAs created around Ichimoku. I would use it more as an indicator. The ones we have seen don't work that well in terms of bouncing off the clouds or trading off the crossovers as signals or using the Kumo flips. They don't tend to work that well. But as indicators, they can be pretty good. So I'll take a look at that if I were you. Okay. Then also we'd advise you that, look, this is a more technical indicator. A lot of the concepts I've used today, like moving average crossovers, resistance support lines, trailing stop losses, this is jargon to a lot of you, especially if you're new. So make sure to attend our earlier webinars where we're actually breaking down FX into its constituent parts, A to Z, where you learn the very basics. Ichimoku is not something we would suggest to you if you are new to trading, right? Stick to relative strength index. That's pretty dumb and cute. It's more easy to understand, and over time you can build up your arsenal with these more interesting indicators. Now, one thing I want to say is that the webinar title is How to Use Ichimoku-renko. There's no link between the two, but this is a two-part series because both are Japanese contributions to FX. We're going to be going over the Renko one probably in a few weeks' time. In short, it's pretty useless. And I do mean that with a caveat. It can be used in certain instances, but the Ichimoku, in our opinion, is a better indicator. Okay, so on that note, I'll open the questions now. Okay, the bullish and bearish part. Nahala's a Masango is. Nahala, can you repeat your question? It's not a full question. Nasfo Makamo is asking, does the green line always move with the market price? It depends which green line you mean. That's a good question. There are two green lines, if you recall. And there's the Senku span. This moves with the market price. It's an extrapolation or projection of the price 26 periods into the future. The other green line, the Chiku span, also does. Yes. How can you place a stop loss in that CAS? Again, I don't know what CAS is, CAS, but I'm assuming you mean in this formation where you would place your stops. Typically, again, that's a good question if I understood correctly. You would, let's say you're trading a long and you're trading a crossover with a bounce on the Kumo periphery. You would place your stops at the opposite end of the Kumo cloud, right? So at the other border. So somewhere along where you see my mouse pointer, that's where you would place it. For those of you that are using support and resistance levels, then you would basically plot those on your charts and see where the nearest next logical point of support is, whether it's S1 or S2. That's where you could place your stop losses. Joel is asking, what is the best time frame to use with this indicator? 1 hour charts, I would say, Joel. 1 hour or 4 hour. Novovo is asking, does the one which comes in default on MT4 comes with this one here, or we have to set our own? No, the default one comes with all these parameters. No problem with that. One moment. More questions coming in. Joel Bharat, among the 4 indicators in Ichimoku, which one is more significant? I would say you should use the crossovers and the Kumo bounces, the price touching the Kumos. Now, if the price goes through, it pierces a cloud, Kumo, and it goes all the way through, that's an indication that there's going to be a flip, a directional change in the market, like you see here. Okay. Ayode is saying, do you use this indicator as a standalone or in conjunction with other indicators? You're already using crossovers here, so there's no need to use the histogram from the MACD. It's irrelevant. You could use this with RSI divergence if you want. You can combine indicators. It's not necessary, but you certainly can. Can you still not hear me? Can you all hear me? I think you can hear me, right? Good. Okay, so Ichimoku and Renko are independent of each other. Yes, Chilong, they are independent of each other. There's no link. So a question from Kotso, what time frame best to use the indicator? 1 hour and 4 hour charts, Kotso. Question from Nalanga, how can the indicator give a signal, the bullish trend or a bearish trend? This is bullish, Nalanga. Do you see in front of you now? As I described earlier, when the blue line crosses the red line from below and the price bounces off the green cloud, that's bullish. And bearish is the reverse. Okay. See a question from Nosovo. How do you see a future possible reversal? Okay. If the price, you see how here the price tried to break the cloud, but it failed and went down? That means it's going to further continue down. If it broke it and went through and it cut through the cloud, that's a reversal, like you see here. Do you see here? The price fell and then it tried to break the cloud and it cut through the red bearish cloud, and this, it broke it. And that's a sign that this red cloud will become green and the price will move up. That's a sign of a reversal. The price, the Tenkan Sen going below the red line from below is a sign of a reversal. Question for Kogotso Moloko. Can one add support and resistance lines? Yes, one can do that. Any further questions? Okay, see a question from Ayode. Do you suggest changing the values of the moving average, maybe based on the time frame it's being used? No, you can use, typically you should stick to 9 days and 26 periods. But you can certainly change the values. It's not a problem. It's not against the theory. We'd stick to 9 and 26. Question from Joel. Do you use Ichimoku? Joel, I do rarely. I mean, again, as I said, my type of trading is, it's more fundamental. It's more news-based, longer term. For example, I have a short position open on US dollar Swiss franc for the last 2 months. I'm very much against. I don't think. I think there's a huge drop in the dollar coming. That's my personal opinion, not that of Hot Forex or Blue Sky Binary. So I'm just bearish on the entire Trump presidency and everything. So I think eventually there's going to be a collapse, and so I take very long-term views. I don't use Ichimoku that much. It's a good indicator for short-term trading. It's certainly better than some of the other crap out there, like relative strength index, but I don't personally use it. See a question from Nosovo. Can you compare this to any other indicator because you said we have 4 signals on it? Yeah, so I've given you the main usages of the indicator. The closest comparison I can draw with it is to MACD, which is the moving average crossover divergence, which has a histogram, which has the moving average crossover signal in it as well. We're not going to discuss that today because we do a separate webinar on that. So a question from Rowan Budika. Welcome, sir. Please tell me what are the settings of the Ichimoku. These are the default settings. 9 days, 26 days for the Tenkan and Kijun. And then for the Chiku and Senku, it's 26 and 26. And for the Senku span, it's 52. The default conditions are fine. Last call for questions. Final call for questions. Iota is asking, what will you say is the use of the lagging line? None. I don't see any use of it. Any further questions? Yes, Ruwan is asking, can I download this webinar? It's recorded and it's going to be sent to HotForex, and you can then access it in your control panel. Nosovo is asking, does it show any information to react to fundamentals? Well, the price reacts to fundamental changes, so price changes reflect that, and then therefore the Ichimoku does as well. It's calculated off of price, right? So in a way, yes, it incorporates those. All right, I don't see any further questions, so I wish you all a good day, and we'll see you for Scalping Strategies webinar next week. Have a good one.